Good morning and welcome to this weekly markets update from MRC Markets. Today is the 21st of July 2014. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss, Aussie and gold. Just going to review what happened in the markets last week and give some sort of outlook for the week ahead. We're not making any trade calls recommendations in this video. Do trade your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com, that would be most appreciated. For any new followers out there, we have 3 moving averages on each of these charts. We've got the red one here is a 50 simple moving average. The purple here is a 100 simple moving average, and the gold is a 200 simple as well. Okay then, so first of all, let's take a look at the Forex calendar for the week ahead. So what's going on in terms of the data coming out, in terms of high impact news mostly. So overnight on Tuesday, well, so it's first of all, nothing's coming out today in terms of high impact stuff. In terms of mid impact, you've got at 11 AM German Buber monthly report, but that shouldn't move the markets too much. In terms of overnight, tomorrow you've got the RBA Governor Stevens speaking. At 1:30 GMT, you got the US CPI, and then the core CPI at 3 PM. You have US existing home sales. Overnight on Wednesday, you got Australian CPI quarter and quarter. At 9:30, you got the MPC asset purchase facility votes and the MPC official bank rate votes. At 12:45 PM, you got Bank of England Governor Carney speaking. At 1:30, for any of you who trade the Canadian dollar, you got the retail sales, the core retail sales. And at 10 PM on Wednesday, any of you trade the New Zealand dollar, you got the official cash rate, the RBNZ rate statement, and the trade balance figures as well. On Thursday overnight, you got the Chinese HSBC flash manufacturing PMI. At 8 AM, you got the French. You got lots of European PMIs coming up between sort of 8 PM and 9 PM as well. The main ones being the French and German ones there. At 9:30, you've got more UK data. You've got the UK retail sales month-on-month figures. At 1:30, you've got the US weekly jobless claims. And at 3 PM, you have the US new home sales numbers there. And on Friday overnight, you've got New Zealand ANZ business confidence data at 9 AM. You've got German IFO business climate. At 9:30 AM, more UK data. This time it's the preliminary GDP quarter-on-quarter figures, so a big number there. And to round off the week in terms of high impact news, at 1:30 PM GMT, you've got the US core durable goods orders month-on-month figures. So quite an interesting week, pretty standard week in terms of data. The main highlight really being on Wednesday, you got obviously from the UK the MPC stuff, and then I suppose Friday more big UK data being the preliminary GDP, but quite a bit of US stuff as well coming out. So yeah, it should be an interesting week in terms of the data front. No reason why we should see any sort of low volumes. Although it is the summer, so low volumes do tend to happen, but nevertheless we should get where the charts are setting up quite interesting at the minute. Some interesting moves out there, so let's have a look at them. So Euro dollar, in terms of the weekly, what's going on? Last week's weekly candle, quite a heavy candle. Remember, we got below the 50-week moving average. It closed quite bearish, so there is a bit of lower wick on that. In terms of the fibs, what have we been speaking about? It's been this one here, but when you add, normally on these videos we just use the 50% and the 61.8% retracement just to keep it nice and simple in terms of a retracement sort of zone. But the 38.2 levels do work out quite well at times. So, and this is a classic example here. Although me personally, I don't think they tend to bounce as well. So when price comes down to them, as you can see here, so we had that bounce a few weeks ago, but it didn't bounce up that high. And then you can see we've come back down and we're retesting this 38.2. So key line going into this week is the one spot 35.18, and of course, in terms of keeping it nice and simple with a round number, the 135 is the key one to keep out for as well. So key level already going into this week is this 135 marker. 135.18 is that 38.2 level. So yeah, well, in terms of the weekly chart, it's all about the weekly candle close this week. So if we close below that, then I think we should definitely see a test this 50% retracement, or at least the 200-week moving average there. In terms of the daily chart, you can see we have actually slightly come below that, but you can see on Friday's candle was a nice sort of reversal candle there, but you can already see today the sellers have come back in trying to push it down quite aggressively here. So also interesting to note this sort of support level here, which comes in at one spot 35.33. So I'm just to change the colour of that to brown, because that's what is the sort of support and resistance level. So you can see we've come up in this previous support in terms of daily candle closes, is now acting as resistance. So sellers already coming in at that previous support, now acting as new resistance. Sellers trying to cap it at the one spot 35.33s there. So keep an eye out on that as well. So yeah, the other thing we were speaking about in terms of why we're sort of going down now already was this move here, remember. So that fib there, high of May to low of June. So you can see nice sell off there, and then retracement from June there, came up to this 38.2% retracement, which coincided with 200-day moving average. Also interesting to note, we've got this 100-day moving average crossing below the 200-day as well, so key sort of selling signal there for a lot of people, I'd have thought. But anyway, this fib is moved down now, and you can now see we're testing the 0% line. It is currently holding, but it is starting to look a bit heavy today. Today's daily candle is a very key one, I think. If we do close below, well, if we close at the candle sort of formation as it is now, then I think we'll see the 0% line get taken out and stops getting taken out there. So, but if we close above, then we could get another sort of test this 38.2% level. So today's candle is definitely a key one indeed. In terms of the 4-hour chart, nothing major to note really. The only thing I can think of is in terms of sort of last week, that fib you can see I've just drawn there. So sort of off the 38.2% level, a small sort of fib within a fib there. Sellers coming in at sort of 61.8s there, which actually coincided with the 138. Well, I don't know. Yeah, this level came in at the one spot 36.50s to the pip, I recall. Right there. So I'm just going to clean this chart up a bit. It's a bit messy. Yeah, so it just flips it down into the 4-hour chart. So what happened last week? That this is the lovely move, nice downtrend, retracement up, and then bam, we got sold off that 136.50s. That may have even been the week before, actually. Yeah, that was the week before. Sorry, but you can see it continued last week quite heavily. So that was another sort of classic example of fibs within bigger fib moves there. Okay, now let's have a look at the cable chart. It's starting to retrace now on this weekly. I mean, it is retracing quite slowly, but what we've been speaking about, I've had such a big uptrend on this cable chart. It's sort of healthy for it to see some sort of retracement, I think. But then again, it may not retrace that far, because of course what we've been speaking about is these fibs here. So I'm just going to do this 38.2 now. I may bring it back up if it's appropriate. So remember, we had these small sort of dips here, which have been playing out for some time now. In fact, I think this previous one here may have been was that a 50%? Yeah, surprise, surprise, look at that. That was a 50% as well. So this was the first dip here, bam, right off the 50% rotated high. And then if you just extend your highs and extend the lows to the sort of previous swing high and swing lows, then that one there, that was off the 61.8. Then if you extend the high again and extend the low, so that swing low there, you can see it's clear on the daily chart, bear in mind. That was the next one there after 50%. So the next one now to keep an eye out for, I think, is this swing high and swing low here. And you can see this on the daily chart now. But bear in mind, last week's weekly candle is quite a sort of reversal candle there. A lot of indecision in there. There is still some lower wick in that, but we've had two bearish candles in a row now. So I would not be surprised to see some sort of retracement this week down towards this 50% retracement, which coincides with previous support as well at the 169 42s. Also keep in mind this previous high around here, so that coincides, what level we're talking about there, that sort of 169 70s there, so keep an eye on that level as well. So I'll change the colour of that. So yeah, I mean, you can see it's just, well, maybe it's just a flag. That's why I think this this fib could be a decent one here. So because it is retracing quite slowly, so long-term buyers are sort of, I would not be surprised to see them sort of banking profits, and that's why we're seeing this sort of flaggy formation, a slow sort of retrace down here. So yeah, keeping up on the price action, I think we could get some decent action if it does get down towards here. And then yeah, it then could just keep on rotating higher and continuing this weekly uptrend. And in terms of the 4-hour chart, nothing major to sort of keep an eye out for here. I mean, a lot of people are just selling any sort of bounces. I'd have thought just playing out the sort of round numbers. So you got 171s. Yes, your ones. So why did I put that as blue? Just change that to pink. I like to keep pink for the sort of round numbers here. So yeah, 171's key line in the sand there. Surprise, surprise. We've already seen a test of that today. So I've just flipped it to the 1-hour chart there. So classic example there. It's also previous support turned into new resistance already today. So sellers buying any sort of dip at obvious levels. So that's just a classic example of how to sort of play selling any sort of bounces there. But that's the view on cable, a pretty simple one really. Dollar Swiss on the weekly, it's been playing out very nicely. What have we been speaking about is this fib move here on the weekly chart. So low of the year to high of the year. Retracement down off the 50%, that's a couple of weeks ago. Remember, nice reversal candle, and surprise, surprise, we've seen rotation up towards this 50-week moving average as expected there. Yes, we had a weekly close below that last week, but it looks quite bullish. I think I would not be surprised to see us sort of rotate higher towards the 0% line here and fully take out that fib. But of course, 50-week moving average could hold here and could sort of reverse. So that's pretty much the view on the weekly chart. And in terms of the daily, you can see same move, very, very technical. Remember, we had that weekly reversal off of that 50%. And then also, what do we have? I think we spoke about this in last week's video actually, because we did it later on in the week. This smaller move here. So classic example of a fib within a bigger fib here. Nice sort of reversal candle there. Not a green candle, but a nice lower wick there. Close above the 200-day moving average, and we rotated higher there. So in terms of buying any sort of dips, that'll personally be the fib that I'd look at there. And I thought I assume a lot of other people will be looking at as well. So that's just extending that low to that swing low and extending the high to the new swing high as well. And that's the view on the 4-hour chart there as well. You can see nice and clear there. Also, this 50%, well, the 50% coincides with a nice sort of round number, being the 0.8950s. What have I done there? Yeah, need a bit of parameters. 0.8950s. And that sort of coincides with these previous highs around here. Nice previous spike high there as well. Also, what we get in here on this 4-hour chart is the 50 SMA crossing up above the 200 SMA here. So a lot of people will be seeing that as a sort of bullish signal. So it's just more confidence really if it does start to retrace. Although this current 4-hour candle is looking quite bullish, but if we do retrace it, get to this 50%, it's quite a few pieces of confidence here. So the 8950s. And this moving average cross up as well, which could pretty much line up with that 50% if we get there. So interesting fibs here, interesting setups on this dollar Swiss on all time frames. Aussie dollar on the weekly still chopping around, but it's still sort of grinding higher towards this 100-week moving average. You can see last week's weekly candle, quite a nice bullish candle there, nice lower wick. It was just a pretty much standard sort of continuation pattern here on this Aussie chart. Nothing major on the weekly, so let's flip it to the daily. What have we been speaking about? That as the first fib move there, remember. I mean, what have we spoken about in terms of sort of round numbers? You've got the sort of the 0.92 level here. Has been key support. And then you've got the 0.9450s. Key sort of resistance. We did have that fake out close above there, then a sort of close below. But there's sort of two key round numbers to keep an eye out for. Then you've got 0.9350s. It's been a nice sort of intraday support and resistance level. You can see there sort of key line in the sand, price chopping in between that sort of level. But in terms of fibs, that was the first move we spoke about there. Then if you extend your high, so we've got a nice sort of base support and then a nice swing high there. You can see we've had this retracement, and you can see buyers coming in at the sort of 0.9350 level, which coincides in between this 50% and 61.8% retracement zone here. Nice sort of 100-day moving average support as well, nice 50-day moving average support. So lots of things keeping Aussie propped up here. So I'd not be surprised to see it continue to sort of rotate higher, although it is sort of struggling to bounce. I mean, we had that first bounce there, but then it got capped at that 0.9450 level. So this is the next sort of bounce up here off the sort of nice 9350s, and it's trying to sort of grind higher. But you can see on this 4-hour chart, quite messy here, lots of moving averages, chopping in between here. Price sort of come off the 100 SMA here, and then you can see it's currently getting support at the 200 SMA here as well. So quite a tricky one in terms of the intraday, the smaller term charts. But if you just flip it back to that weekly there, it does look much more simplistic there. You can see the weekly closes above this 50% retrace here than 0.9350. So it is looking quite bullish. I mean, in terms of sort of buying dips, I personally would be looking to buy dips towards the upside here instead of the downside. Right then, gold on the daily chart. What's been going on? Key focus, it's been all about this fib move here. In my opinion, a lovely uptrend from the low of June towards the high of July. Lovely uptrend, retracement down towards the 50% line. I think we tweeted this chart as well. Lovely confluence with a 50-day moving average, 100-day moving average as well. Didn't quite get a really obvious reversal candle, but there is a bit of lower wick on that. A nice green candle there off the 100-day, and it's starting to rotate towards the upside here. So that's the key fib move. And in terms of shorter term time frames, another classic example of a fib inside a bigger fib. So a bullish fib here within the bigger move. Surprise, surprise, lovely uptrend, retrace down to the 61.8. Nice lower wick there, and surprise, surprise, we're rotating towards the upside. So lovely moves here on this gold chart. It's all about a grind higher, I think. I mean, the counter move was there, surprise, surprise, right off this 61.8. So the fibs have been playing out really well on gold, which makes a change, because on that recent sort of daily chart, they didn't really play out that well in terms of this bigger move here. It was just quite choppy and quite messy, but it's starting to play out quite nicely now. So yeah, I mean, in terms of this 4-hour chart, so you've got this move here. I've just spoken about this on the daily, but just so you can see it clear on the 4-hour there. Textbook stuff here. Lovely confluence with the 200 SMA as well. So you've got that bullish move there. And then you've got the counter move here, which is briefly holding out. But then you've got that smaller fib as well, which is that one there. So it looks like it's quite bullish here, I think, on gold. It looks like this move is going to play out towards that 0%. And then if it does take out that high, then it's then all about this 0% of the bigger move here. And then it should get quite interesting now, I think, on gold. Then we're sort of taking out highs here, and then potentially looking at different sort of dips off of that low there if that move gets taken out. So keep an eye on that. I'll try and post some charts on Twitter this week of gold. Just sort of keep an update on what's going on the gold chart. Okay, that's all for today in terms of the charts. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube channel, or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.